January or CPI has spiked to 6.52% against estimates of 6%, while core inflation has remained unchanged at 6.1%. Food inflation has jumped up to 5.9% versus 4.1% last month. What's the implication of this higher than expected jump in the retail inflation numbers? I'm going across to Maithili Bursumat, consulting editor, ET Now, for more.
After declining for 2 consecutive months, retail inflation, or the CPI, Consumer Price Index, has again picked up in January to an unprecedented number, at least going by what economists' estimates were, of 6.52%, well above the RBI's own tolerance band of 2 to 6%. That is the RBI's target range. Remember, in December, the inflation rate was only 5.72. What makes matters worse is that food inflation has picked up to 5.9%. In December, the number was just 4.2%. Given that the winter months normally see food inflation declining, this is particularly distressing. Even more so than this is the fact that cereal inflation is remarkably high. It's run up by 2.4% month on month. That means between December and January. Given that cereals form the bulk of the consumption basket of the poor and the lower middle class, I think there's virtually nothing that is good as far as today's inflation numbers are concerned. Also, the RBI had ironically lowered its estimate for Q4, the current quarter that we are in, to 5.6% from the previous monetary policy number of 5.9%. So clearly the RBI has got it all wrong. This is also the third consecutive quarter where the average inflation comes to more than 6%. Under the framework of the monetary policy targeting framework, if the RBI is unable to stay within that 6% band for 3 consecutive quarters, it has to write a letter to the government. It's already written one letter. Will it be an encore? We'll have to wait and see whether the RBI feels obliged to write a second mea culpa to government. But as of now, we don't know, because even the contents of the first letter have not been made public.
Now, one stock that was in focus today was that of Info Edge. IT was closed down. It was closed down to 10% in trade. High cash burn and uncertainty around funding reflected in the company's share. But more importantly, the company decided to undertake a full impairment of 276 crore worth of investment in pro-tech firm, and which is why the street seems to be miffed. Let me go across to Sharad Dubey, who's bringing us more detail.
Well, yes, the most important thing about Info Edge, it has fallen its biggest intraday fall seen in almost 3 years. Now, the most important thing is that 276 crore rupees provisioning was there, and it was a PropTech investment run by almost, you can say, ex-housing CEO Rahul Yadav. And this is the important thing, is because of this the net losses actually went up, and this actually hurt the analyst estimates as well. Now, overall, if we look, the entire stock is trading below its key daily moving averages. And this impact which we are seeing, even the brokerage have stated that the numbers have been coming on the adverse impact. Now, do remember that the margins were, however, a positive surprise going ahead, but the overall numbers which we are talking about, they were in line with expectations. Now, brokerages have stated that JP Morgan has stated that the IT slowdown is there, and because of that impact, they have cut the EV EBITDA multiple of Naukri. And apart from this, even the management commentary which we saw, there was a kind of, they expressed concern, especially on the real estate demand. Now, they have a business of 99 acres. And IIFL Securities also stated that this profit would be impacted due to the competition seen in the intensity. Now, of course, the standalone business, which is Naukri, they are also getting impacted because there is a slowdown happening in the IT sector. Kotak Institutional Equities, they have come up with their report, and they have stated they are cutting the EPS numbers from almost 12 to 15% for the next 2 years itself. Now, look at the SOTP valuation. Where does it stand? The standalone business comes in at almost 2,938 rupees. While for Zomato, it's at 494, PB Fintech, it's 259, and other investments, which also include Jeevan Saathi and 99 acres, stands at around 430 rupees, and for cash, it's around 288, making an SOTP valuation of almost 4,408 rupees. But the question arises, what lies ahead for Info Edge after such a alarming stock fall which was seen today? The important thing is that the current investment is something which would be focusing on, especially from medium to long term basis, and how they kind of go up, and that will actually help the SOTP valuations go up. And lastly, in case the company does aggressive acquisitions, then it becomes a risk.
All right, the auto sales data for January suggests volumes were up around 17% year-on-year due to strong demand from utility vehicles and better consumer demand, according to a report by Siam. But two-wheelers, which are an indicator of financial health of India's lower to middle class households, shows that demand has continued to be sluggish. Now, we broke down those inflation numbers for you some time ago, but you also saw inflation has come back above the RBI's tolerance limit. Does this mean more rate hikes on the cards? How will that impact the auto sector? That's all that we will look at today. But first, let me go across to my colleague Aishwarya Patil, who's breaking down the report by Siam.
That's right. Auto sales data is looked at very closely as one of the key indicators to gauge private consumption. It is also used to calculate a country's economic growth. Well, this time around, Siam data suggests that the wholesale passenger vehicles volumes rose by 2,98,093 units, which is a record high for the month of January. 2,54,000 units which were sold as compared to last year. Driven by strong demand for utility vehicles and better consumer sentiment, the wholesale passenger vehicle sales volumes rose by 17.2% in the month of January. Now remember, earlier FADA auto sales data indicated a growth of 22% in the passenger vehicle segment. Among other details, Siam also suggests that the now popular and more pricier UVs, or the utility vehicle sales, climbed around 28% and continued to outnumber the sales of passenger cars in January. Two-wheeler sales, on the other hand, were only up by 3.8% for the month of January as compared to 6.3% rise in the month of October, which was the festive season. In fact, the president of Siam, Mr. Vinod Agarwal, said that the two-wheelers in the recent times have not kept in pace with the other segments of the vehicle segment.
All right, so what are the January numbers telling us? To speak more on this, I'm joined now by Hormaz Sarabji, editor Autocar India, Gaurav Vangal, associate director at S&P Global Mobility, and Nikunj Sanghi, former president at FADA. Welcome to all of you, and thank you so much for joining us on the India development debate. Hormaz, January has been a cracker. January is generally better, isn't it, as the first year of the month? So we have seen that improvement, better than expected. The question is sustainability. When you're seeing the Siam data today, which is giving us a look from April onwards, are you seeing that consistency there?
Well, I think, as you said, January is a good month. I think it's a lot to do with also supply chain issues easing up. There's more, let's say, supply. And though the numbers are well, what I do see is that there is a certain push in the market. Used to be, there is a pull on certain models, but I think there is still a bit of a push there. So while the numbers still look good, I think there is a little bit of softening is what I feel. You see schemes coming back, a few discounts cropping up. Overall, I still think there's a fair amount in the pipeline that needs to be fulfilled, largely because of supply issues, which was still there. But I think, so it's been a great month. But I think going forward, I would be cautiously optimistic. I think, we will be seeing just single-digit growths because I think right now what we are seeing is that there is a certain saturation in certain segments.
Hormaz, just a quick follow-up of that, and of course we'll talk about the numbers further down, but another good indicator of what's happening in this space is the number of launches, which has suddenly gone up manifold. Is that showing us confidence in consumer sentiment being kept up?
Well, I think, always when there are new launches, it translates to more sales because I think, you need to have more choice out there. And I think that really, overall choice, new launches is definitely a driver of new sales. So we've had some pretty significant launches, but again, and these are the new ones which have long waiting lists. I mean, something like, the last one I think was the Urban High Cross, pretty much at the high end, but again, a long waiting list for certain variants over there. So that again adds to the overall numbers. You didn't have this model earlier. And, we are going to see some interesting launches right now. You've got models like, the Fronx also coming out. We have to see what they all in the mass segment. And clearly, even the EV space is also hotting up with models like the XUV 400, which is again a mass segment. In fact, it's kind of triggered a bit of a price war because the minute they launch, Tata cut the price on the Nexon EV. So yeah, as you said, definitely, new launches, they definitely stimulate the market. But I think, overall, we have to be prepared that it won't be as much of a boom as last year. And again, last year was of a smaller base than the year before, which was COVID. So, in terms of percentage, I don't think we'll be able to grow at the rate that we did last year.
Gaurav Vangal, why auto numbers and the way the space is doing is always so interesting, because it gives us a peek into consumption. Is consumption taking place at this end in this space? It's still a discretionary purchase for several Indian households, and not everyone can afford it. Do you think that the January numbers will sustain, or do you share Hormaz's view that there may be tough times up ahead?
I think I share Horma's view, but yes, I'm a bit optimistic. I'm not cautiously optimistic right now. And as last year, I'm still optimistic about Indian market to grow. What we are forecasting is at 5 to 8% right now. But I think we have recent announcement at the budget with the 9 lakh vehicles, which is going to get replaced by the central government. If it is going to happen this year, I think we can still have a room to go to a double digit. If we can convert this within this financial year, or this is the calendar year, we definitely have room to grow up. But yes, if this is not going to come, I think 5 to 8% looks good. And yes, I do agree with the Hormas mentioning that demand is gradually declining. It's softening right now, and the pent-up demand has got. There is a demand for a couple of models which was always there, like High Cross is there, the Hormas has just mentioned, and then another vehicle which is Grand Vitara is there, and then we have multiple launches coming around in the year. So I think demand is going to soften up. But yes, if some new demand comes, like the central government scheme of replacing the 9 lakh vehicles, then definitely we're going again for a double-digit growth rate.
Okay, so Gaurav Vangal continues to be optimistic. Nikunj Sanghi, is January an outlier in that sense? And, throughout different segments, we are hearing the same story, that all of 2022 or most of 2022 was looking at pent-up demand being fulfilled. And that then has a cap beyond a certain point. Is that what you think we've seen in the last few months?
Well, I would agree more with Vangal in the terms of passenger vehicle segment continuing to grow. I think 2023 will probably be a record year for the passenger vehicle segment, except for the entry-level cars. I think entry-level cars are suffering, entry-level, and that's where you are seeing a number of discounts coming in from almost every OEM, and they want to keep the momentum going even in the entry-level segment. But barring the entry-level segment, I have never seen passenger vehicles perform the way they have. They have, in fact, surpassed even pre-COVID levels. They started surpassing pre-COVID levels last year itself. And I think that growth continues. So the stress will be in entry-level cars. And of course, two-wheelers is a very, very big cause of worry. You can see them going down month on month. And I think affordability is a major reason why two-wheelers are not doing well. And we really hope that the government comes up with something to make two-wheelers, which are mobility solutions for the common man, get some relief in terms of GST whenever the GST Council meets again, because that's one segment which is worrying the entire auto sector.
I just want to follow up on that, because that's an important point you've raised. The entry-level passenger vehicles are not doing as well as the utility vehicle segments, or the more expensive segments. Two-wheelers are not doing so well. What do you put that down to? Are we seeing a more and more sort of skewed pattern?
It definitely is. In fact, it's getting skewed month on month. I mean, the skew towards more expensive vehicles is increasing month on month, and which shows that people who can afford it want the best, want the top end, want the ones which are very rich in features. And people who cannot afford it are in fact postponing their purchases. A lot of aspirational buyers who would have normally graduated from two-wheelers to entry-level segments, I think they are holding back their savings because of affordability. Please understand that there has been a huge cost increase because of regulatory restrictions having come in, coupled with fuel price increases. And I think taking both together, it's pinching the pocket of the consumer at the lower end. And I don't see an immediate solution. And today, the numbers, the inflation numbers that were just shared on your show, and they'll only make it even worse. And I think the people bottom of the pyramid are the ones who are going to get hit the worst, because it's food inflation and fuel inflation. I think those are the things which are really going to hurt them.
And we now know, I mean, it's also telling us that there's no, guarantee of a pause in rate hikes. We've already seen a 25 bips rate hike, and it's unlikely that that's going to pause anytime soon. So we could be set for more rate hikes. We don't know either way. Hormaz, I think it's important to break down this detail, because usually when these numbers are reported, the headline numbers are reported. So you get a nice figure, 17% up in January year on year. But in terms of volumes, even though the demand for higher end cars with more features is increasing, the number of sales or the volume would be much lesser, wouldn't it, than entry level and two-wheelers?
Yeah, it would. But if you take the overall volume of the market, it has grown. In fact, though this could be another record year, because last year was a record year. So if we are growing, this year will again be a record year. So I think what we've got to see are certain trends. And as Nikunj said, people who can afford it, they are buying, and those who can't, they are not buying. It's very simple. I think for those who can afford it, they are looking forward to buy a car right now and not looking at saving for the future. I think maybe it's a bit of an effect also coming out of COVID. So, the whole YOLO thing. But what we have seen is that the market has shifted up. The core of the market is no longer at the bottom. In fact, it's moving into the 10 plus lakh category as well. And again, that's because there's more choice over there. I think, people want more. I mean, that segment is no longer that price conscious. They're more value conscious. So they're willing to spend if they have, let's say, more choice and more features. But, coming back to your point, yes, it's not as much, but to be honest, it's a segment that's really growing. So I wouldn't even say that's, at the lower end in terms of, or let's say a smaller proportion of the market. I think very soon we could see that band is probably the largest band in the market, and it's no longer the budget end as it was. I mean, I think it would eventually grow to that.
What does that mean in terms of consumer trends? It's not as if more people can afford higher end cars. It's those who want to are going in for higher end cars, and a large number of people are not able to afford even two-wheelers. Is that how you're seeing it, Hormaz?
Yes, that's how I'm seeing it. I mean, there are two, I think, distinct consumer sets over here, and really, but I think what has happened also for those who can, clearly a car has moved from functionality to something that's much more aspirational. That clearly is the kind of different change in mindset of customers or consumers. So, it's really beyond the functionality, whereas at the lower end, it's still the functionality. And, for that, you tend to postpone your purchase decision, and everything is very cost driven. As Nikunj said, Nikunj said, whether it's especially with the two-wheeler segment, fuel prices have gone up, prices of the products have gone through the roof. The overall cost of motoring across the board, whether it's two-wheelers, passenger cars, has shot up dramatically. And within that, some can absorb or take that higher cost of motoring, significantly higher cost of motoring, while others can't.
Gaurav Vangal, quite a few sort of impact making elements to talk about. One is inflation rates. We've talked about that today, at least for this month. For the last month, it's been higher than expected. So inflation is not really going out of the picture. We don't know if there is going to be an impact on the lower end, which deepens monsoon, etc. We'll have to wait and see. And on the other hand, you have huge pushes for public transport in large cities. Metros being built everywhere, etc. Do you think that's going to change the picture of mobility in private vehicles over the next few years?
No, I don't think so, because car is something that I think every youth wanted to have right now, or it's an inspiration, right? So I don't think that it is going to change in India, because the penetrations are very low right now. I think 32 per 1,000 cars are available only. So I think that it is not going to change. People are going to buy cars, even though we have metros. Even in Delhi we have metro, right? But I don't think that this aspiration factor
What
is
happened to
going
that
to impact it.
generation who said we don't want a car because we'll just Uber it, or what happened to that whole narrative?
I think shared mobility has their own problems. I believe people. I have seen people, because of the high cancellation rates. Even people sitting in the panels. I can say that everybody has experienced their negative side of the shared mobility. So I really see that that is that's a discouraging factor which is coming from the shared mobility right now, and people, young generation, always wanted to have car. I currently there's a dramatic shift after the COVID, because of the personal mobility. I think what we are experiencing, and I think that is going to drive the market going forward also.
Nikunj, you agree with that? That the space to grow is only going to increase in a country like India, but can that happen without entry-level vehicles and two-wheelers participating?
So I think what we need to understand is that the potential at the lower end, both two-wheelers and cars, is still very huge. So while market is moving up, while the core is becoming 10 lakhs plus, but the potential at less than 10 lakhs is still very, very huge. And there is this huge section of people who would want to upgrade from a two-wheeler to a car. I think it's only a question of affordability which is holding it back. And like Gaurav said, that while the choice of personal mobility is there, but I think both shared and personal mobility are going to coexist. So there are reasons why you will want to have your own car, but there are reasons why you will also want to use shared mobility. So I think they're going to coexist. Shared mobility, once it comes out of its problems, I think these are problems which, because most of the shared mobility solutions have come out of startups. And I think once they get over it, then shared mobility is going to stay there, and it's going to stay there. Even in a country like America, which is the most matured car market in the world, shared mobility has coexisted. But yes, I think the party is not over for cars. It's going to grow, and I am more than confident that 23 is going to be a record-breaking year specifically for passenger vehicles.
We started that way, looking at the Jan numbers. So that's a good beginning. Thank you so much to all of you for joining us on the discussion.